Okay, guys, let's talk about EV charging station stock. So there was a lot of talk on my previous video on ChargePoint. I uploaded the video, guys. A lot of you guys are saying ChargePoint stock is junk. Lots of things are going on. A lot of chatter in the comments. So I wanted to create a follow-up video where we're going to talk about the best EV charging station stocks to buy right now. And I wanted to do this comparison to show you guys that this isn't a single problem with ChargePoint. Yes, there was a bunch of insider selling, but there is a bigger problem going on in the broader market when it comes to this sector. So let's dig into the numbers, guys. We're going to do a lot of technical analysis in this video. We're going to do a lot of fundamental analysis. We're going to talk about future growth prospects, and we're going to dig into my massive 3,000 plus word complete breakdown on my website about the best EV charging station stocks, guys. So be sure, if you guys like this information, if you're bullish on EV car companies, so everyone's talking about Tesla, everyone's talking about Lucid Motors, but what about these companies that are going to be powering these vehicles? Yes, this is the picks and shovels play, guys. This is where I think the massive upside is. Yes, there's going to be upside with car makers like Lucid and Tesla, but let's be clear, guys. Car makers, EV makers, are very asset heavy businesses, meaning that it costs a lot of capital, invested capital, to create a return. Whereas these charging companies are asset light, okay? They basically put their charging ports out there, they put their charging stations out there, and they let them go make money. So this is an asset light model. It's going to provide excellent returns. We're going to talk about around 6 or 7 different stocks. So let's get right into it, guys. So I couldn't fit all of the stocks on the video, and I did cover about 7 of them on my flagship article, okay? So we're going to talk about the article right now, but right now we're just going to quickly look at this Google Sheets. We have a quick breakdown of all of them. So Tesla actually does have their own supercharging stations. We're going to talk a little bit more about them. Then we have ChargePoint, which is my favorite play. That stock's at around 18 bucks with around $5 to $6 billion market cap. We have EVGO, which is around 8 bucks. That's at a $2 billion market cap. Blink Charging, which is at around a $1 billion market cap. TPGY, guys. Okay, this is the charging ticker for EVBox. Then we have Volta. Volta is a fantastic play. The TPGY market cap of $450 million. Volta price of $8 with a market cap of around $1.2 billion. And then we finally have Nuve, guys. So okay, actually Nuve is so Nuve is at a market cap of around 200 million, guys. So let's get right to the video. So if you guys go to my website, I post this complete rundown, 3,000 plus words, comprehensive rundown of the EV charging station stocks. Okay, guys, you can get a lot of the information here. So basically, I just want to quickly go over why this is so bullish, and I want to use charts. Okay, so just talking about America alone, okay, there are currently around 1 million EVs on the road in the US, and that number is expected to grow by 13x. Okay, 13x in the next 10 years. So as you can see here, this is the EV chart. This is the growth. So there's going to be a lot more vehicles on the road. Okay, Joe Biden with his infrastructure bill, he's going to be investing in EV charging station stocks. Okay, guys, so this is my flagship article on my website. Okay, 3,000 words on a comprehensive breakdown of the EV charging station market. So basically, to keep a long story short, okay, this is an investing in the picks and shovels play, just like the gold rush back in California in the 1800s. We can take a look at this chart. Currently, in last year, approximately, there were around 1 million EVs on the road in the United States. That number is expected to grow 13x to 13 million by 2030. And I think that's pretty conservative. I think a lot of the EVs are going to be basically like the iPhone came out. When you see new technology, smart vehicles, smart cars, I think a lot more people are going to just realize that these are much better, much more fun, and much more modern vehicles. Okay, the ICE vehicle, okay, that technology is literally over 150 years old. So when you drive a gas guzzler car, you're driving using the same technology that people used in the mid 1800s. So I think a lot of people are going to realize, wow, these electric vehicles are faster. Okay, they have better, just better for the environment. More features inside, more things you can do. It's 21st century vehicle, okay, not a 19th century vehicle. So Obviously, I have a complete list. This also talks about how Joe Biden is going to propose to build 500,000 EV charging stations in America by 2030. Now, we all know that this is going to grow. Obviously, there's going to be growth all over the world, but I think U.S., once again, U.S. is still the largest economy in the world, and I think the U.S. is going to really, really lead the charge when it comes to EV vehicles. Now, China will be awesome as well, and but there's other risks, okay, with a lot of Chinese companies, like investing in Chinese car companies like NIO, Li Auto, and Xiaoping. And one of the reasons is for regulatory reasons. Another reason, as you can see, the Chinese CCP, the Communist Party, it really has a strong hold on the Chinese people. You see a lot of technology is banned there. Okay, Facebook is banned there. Twitter, even Bitcoin is banned. So I think there's a lot of risk when you're investing in the Chinese side. So right now I'm going to be focusing on basically the best charging station and best EV companies in the United States and Europe. China is a different story. We're going to talk about that in a later video. So let's just get right back to it. So as you can see here, if we take a look here at these stocks year to date, okay, most of them are down big. Okay, EVGO is down 23%, Volta is down 26%, Blink down 35%, ChargePoint's down 52%, and EVBox is down 61%, guys. So the entire market is down. This isn't, I understand there's a lot of insider selling with ChargePoint, and there's a lot of people that are dumping Tesla stock and stuff like that, moving on to Lucid Motors. But the overall thing is that these stocks have been beaten down. Okay, most of these stocks you're going to get half off. So the first one, okay, so let's talk about them basically in order. So I don't think we need to spend too much time on Tesla. Tesla is self-explanatory. Okay, they have, as of recently in the latest Q2 posting, they have around 2,966, just under 3,000 supercharging stations this year. They opened up their supercharging network to all vehicles. That number is up 46% year over year in Tesla. So Tesla, look, if you guys want to get like the best overall EV play, you want EV charging station exposure, and you want exposure to other industries such as solar energy, and you want exposure to EV vehicles, buy Tesla. But the problem with Tesla stock is that looking at the market cap, okay, the market cap is through the roof. It's almost 800 billion. So for Tesla to 2x, it's going to have to go from basically 800 billion market cap to a $1.6 billion market cap. So that's why I'm focusing on some of these smaller plays. Okay, for them to double, it just doesn't take nearly as much capital invested. But I think if you're conservative and you want to go with one of the better EV charging station plays out there, Tesla's going to continue growing their network. Okay, they're going to grow their network. They're expanding to India. Tesla's safe, but you're just probably not going to get the same returns. The best time to buy Tesla was when I was talking about it in early 2020 before the pandemic. So next is ChargePoint. Okay, guys. So ChargePoint, one of my favorite plays, and this is ChargePoint is a stock that I have the second most exposure to in my personal portfolio, simply because they have like a 70% market share in the entire EV space in the United States, okay? And they're projected to hit over $2 billion in revenue in 2026. So here you can see a chart here. We can see that as I was pointing to earlier, I was showing you guys that chart where we have electric vehicles on the road. This is going up. ChargePoint's revenue should be cranking up with this. And they're also very asset light with good management. The CEO is from Harvard and MIT educated, so he's been a CEO for almost a decade. So, he's in it for the long run. Yes, there's a lot of insider selling, but who hasn't been selling stocks lately? Everyone's been dumping stocks. So we can't just look at one insider. We don't know what happened with Michael Lins from Lins Capital. He ended up dumping the majority of his stake. We don't know why, okay? Maybe he just wanted to divest, maybe he's investing somewhere else. A lot of people are dumping stocks. As you can see here, EV charging stocks have been absolutely crushed. So people are probably, I don't know, moving into, I guess, with yields going up and stuff like that, people are just probably moving into more conservative investments, taking cash off the marketplace. And we really don't know what the Fed is going to do with interest rates. It's been a long bull market, so I guess people are just taking money off the table. So when we take a look at ChargePoint, we take a look at some of these statistics. Right now, since it's not profitable, okay, we're looking at that price to sales ratio around 33 with a just under $6 billion market cap, okay, with 60% quarterly revenue growth year over year. So usually when I'm looking at a company, if it's doing 50% or better, I'm excited. Obviously, you have your rare cases with stocks like Upstart and Coinbase where they might do 1,000%, but that's rare. So usually around 50% or more, I'm pretty excited. That means that the company's growing in the right direction. No reason for me to personally dump my stake. I'm in it for the long run. As long as that EV adoption is going up, this stock is going to run up as well. This is a no-brainer play. And like I said, they're making more revenue per charging station out of their charging station network than any other company on this list, other than Tesla, of course, which is well diversified. Okay, so from a technical standpoint, I like ChargePoint. I know the price is down, but for me, I'm a long-term buyer. And when I buy quality stocks, if I think in the short run, I'll usually get emotional. But most of the quality stocks that I've bought over the last 3 to 5 years, if I sold them, I always regret it. So I try to make sure I'm holding on, staying long-term thinking. I don't need to take profits now, guys. If you want to trade and swing trade stocks, take a look at some of meme stocks or OTC plays. It's going to be hard to swing trade some of these longer play stocks because EV adoption is still in its infancy, guys. So I think ChargePoint's an excellent play. Okay, the second major, the third one on the list is EVGO. So EVGO, okay, this is a company where I think it's really interesting. They have the largest fast charging network, but the problem with EVGO is that I think the valuation is just too high. So we saw with ChargePoint, that was at a price to sales ratio of 33. EVGO is at a price to sales ratio of 128, and they're just doing literally 1/10 of the revenue of ChargePoint, but they too have a 61% quarterly revenue growth. So you can see this is a fast growing industry. Even though these stocks are being dumped, revenue is soaring. Okay, revenue growth is skyrocketing. So it's just like, I don't know. People are panic selling, but these companies are getting better. So, take with, it is what it is. But we know that things are getting better, and we know in the long run, this company traded around $2 billion. If you want a fast charging play, EVGO is an excellent pick. Okay, and the thing about EVGO, like many stocks on this list, trading at just $8, guys. Okay, it's down 23% year to date. It's underneath its original SPAC price. So, like I said, this is not financial advice, but I think it's an interesting buy. Okay, next on the list is Blink Charging. So Blink Charging was another stock that had a ridiculous run. For me personally, like I said, price to sales ratio 113, too expensive for me. They did just under $10 million in trailing 12 months revenue, but they did have ridiculous revenue growth. Now, 176% revenue growth. Now, one of the things I do like about Blink Charging is that this company is founder-led, and founder-led companies usually perform better than non-founder-led companies over the long run. So we're thinking like companies like Amazon, right? Tesla, Netflix. Founder-led companies usually outperform. Blink Charging is founder-led. Okay, they're growing much slower, but they have a little bit of a different business model. They don't use an asset-light approach like ChargePoint does. They actually own and operate all of their charging stations. They're expanding all over America as well as Latin America and the Middle East. So they're not really focusing on Europe. They're kind of going for those other markets. Very interesting play, but from a price to sales standpoint, too expensive for me. But hey, the price has been coming down. Okay, Blink is down about 35%. This is an interesting dip buy. And like I said, it has a low market cap. Okay, the market cap only has to go from 1 billion to 2 billion for you to double your money. So very interesting play here. Okay, so the next pick is TPGY. So this spat actually hasn't finished. Okay, it hasn't actually finished the deal. This is EVBox. This is one of the biggest charging station networks in Europe. They really haven't, they really haven't finished the deal yet. So I'm not exactly sure when the spat deal is going to close. So I'm going to give you guys some of the latest information from my article. Like I said, if you want to check out this article, I'll put a link in the description below. But, EVBox was doing around $120 million in annual sales as of last year. And when the merger has not closed yet, not exactly sure why, but the market cap should be around 1.3 billion. And this is the kind of the footprint for EVBox. They're basically a European-based play. They have all of their charging station points in Europe. So if you guys are interested if you guys are from Europe or you want to invest in a charging network in Europe, but you don't want to go with ChargePoint, which is majority North American company, EVBox is an excellent alternative. Okay, and then next on the list is Volta, guys. So Volta is another company with a very, very unique business model. Okay, nice cheap price, $1 billion market cap, more reasonable price to sales ratio. is founder-led, okay, which is another important thing to me, and it had a ridiculous quarterly revenue growth of 191%, doing $24 million, 12 trailing months. This is another play that I really like. It's founder-led. They have a different business model, okay, so their business model is a little bit different. They actually place advertisements on their charging stations. They offer around 2 hours of free charging, and they have advertisements. So they place their charging stations near restaurants and cafes, and they're comparing themselves to Netflix, Amazon, Priceline, and Airbnb. So most of these are founder-led companies. So Volta is probably my second favorite play behind ChargePoint. I don't know how this revenue model is going to work, but the company has a ridiculous, very, very, very ambitious growth plans down the road, okay? I don't know if you guys could see this, but they plan to grow their revenue to just under $1 billion by 2025. And, you know, looking at the current price to sales ratio, in the next couple of years, okay, this stock could really soar. I really like Volta. It's different, right? Showing ads on the charging station, offering free charging. You know, we see companies like Facebook and Google make a fortune with advertising. Advertising isn't going anywhere, guys, okay? So I think Volta is an interesting play. And then the final play on my list is Nuv. So Nuv is a really, really a speculatory play, okay? It's the smallest on the list by far, just a $200 million market cap with just $4 million in revenue, and they had over 100% revenue growth year over year. Okay, Nuv is more so charging kind of trucks and things like that. They're not really, and they have a new technology, okay, when they're charging, using charging technology, but they're not really focused on the personal vehicle side like ChargePoint or Volta or EVGO. They're more focused on trucks and diesel fuel trucks, not diesel fuel, but trucking and things like that, the commercial side. So this is another play that is going to, I think, do well. There's a lot of upside with Nuv. Very, very low market cap. It reminds me more of like a crypto play, okay, guys? And like I said, I'm going to share, I definitely need to do another video recap on Nuv, because this is one of the stocks that I think has ridiculous upside simply just because of its low market cap, guys. A $200 million market cap. Really, really crazy, guys. So like I said, I think this one is attractive at a price sales ratio of around 45, much cheaper than some of these other companies that I mentioned, but still a decent valuation. So guys, to kind of wrap things up, I just wanted to make this video because I wanted to just give you guys some of my thoughts and tidbits, and to realize that I think this is an interesting opportunity. You know, from over the years that I've been researching in stocks, you're not going to make the most money over 6 months a year. You're really going to make a fortune in the stock market. If you guys out there are looking to retire early, if you guys are looking for financial freedom, you're going to have to probably be holding your stocks between 5 to 8 years. And I know a lot of people want quick gains, but with these type of plays, okay, we're early adopters, okay? EV charging station investors are early adopters. We're like the Bitcoin guys, you know, 8 years ago. So the money's not going to be made. Most of these companies trade at $1 billion market cap. Let's be honest, no one on Wall Street, no one in Wall Street bets, and nobody wants these stocks. So for me personally, this is when I'm attracted to them, when no one wants them. And I know for a fact from my experience in the past how quickly brand new technology can catch on. I'm still just shaking my head on how I was in high school and I saw everyone with these iPhones, and I knew Apple would be crushing it. I knew things were going to turn out well for the smartphone revolution, and I just didn't take action. So I'm much older now. You know, I've been out of high school for over a decade now. I'm well aware of this trend. EV vehicles are basically the next iPhone. These vehicles are going to blow people away. My estimate is that by right now, barely anyone has an EV. But by 2030, if you don't have an EV, people are going to think you're just weird, because why are you still driving a gas guzzler? So that's my research, guys. I hope you guys enjoyed this video. A little bit longer than most videos, but we had a lot of stocks to cover in there. If you guys want to check out this article, you can check out this article on my website. I update it every quarter. I just updated it a couple of days ago. The best EV charging station stocks for in-depth review, guys. If you guys like this video, please give me a thumbs up. I really appreciate it. So that's it till next time, guys. Also, subscribe to the channel. I'm going to be updating a lot more content on a regular basis. You guys can enjoy my stuff. Please check it out. So that's until next time, guys. Take care.